because you're going to tell me you sit on your hands probably. But
No,
what
I'm not going to cop out that easy, Boris.
yeah,
We're on the trading battle. First episode of the year, Boris.
exactly. We want to know. We want to know the juice. We want the meat.
Right,
We want
right.
What's your survival tool? Like what is, how do you survive? I think I have an idea what Austin is going to tell me, so I'm just curious, but because you're going to tell me you sit on your hands probably. But
No,
I'm
not going to cop out that easy, Boris.
yeah,
We're on the trading battle. First episode of the year, Boris.
exactly. We want to know the juice. We want the meat.
Right,
We want
right. No, but I will give a good answer, a little bit
Yeah.
more elaborate than maybe just an indicator. Maybe I'll let Tom do an indicator because he probably has some good ones there. I'll say risk management is the survival tool. If you understand the market that we're in means aggressive profit taking, cutting losses as fast as possible, building rules and systems into your strategy that allow that to happen through study, through back testing, you can look at your previous trades within the strategy and say, how can we be getting out of these quicker? How can we be making more on these trades? Doing that kind of assessment and then applying what you're getting from that assessment into your risk management, that is the survival tool right now. That's why I'm doing pretty well this year so far, while some guys are getting chopped around, like Tom said.
So to press you a little bit more on this, because I'm curious.
Yeah.
In practicality, what does that mean about getting out of trades quicker? Does that mean that, that let's say, just for argument's sake, your classic stop target is 100, just we'll make it even. Your 100-point stop, 100-point target. But now, in a current environment, volatility compresses. You're just not making that 100-point target. Do you just go to like a 70 stop, 70 target? In other words, you compress both parameters to a volatility level that is more conducive to this market? What do you do?
You could do that, but that isn't what I do. So I'm taking trades using EMAs, exponential moving averages. I'm using those EMAs to determine short-term trend, and I'm looking to ride that short-term trend. I'm not trading against that trend ever. So if I'm riding that trend, once that trend changes, that's where I'm looking to take position off that trade. My rules say 50% of the trade comes off if I get an 8 and 21 EMA cross against the direction. If I'm long and they cross down, half the trade's off. Whether it hits my stop loss, which is at a fib level, it's never a set. It's based on a Fibonacci retracement. So it's never like 100 even. It's always different based on whatever the movement of that asset is doing. So wherever it's at, it could be halfway to my stop loss. It could be close to my stop loss. If that cross happens, I'm getting out of that trade.
We're losing Austin a little bit. We lost you. Come back again. So you can repeat because we just lost you for a second.
Oh yeah, sorry. Did you hear me, Tom? Can you hear me, Tom?
I heard it. Yeah.
We heard you. I lost you a little bit. So you're talking about. So it sounds like I'm going to paraphrase you. You tell me if I'm correct. It sounds like, in a former market where you have lots of continuity and big range expansion and volatility is high. So when the EMAs expand and you're running with a trend, your target is always dynamic because it's always contingent on the movement of the EMAs. So in former cases, let's say maybe it's a 100-point move in the EMA. Now these things could cross after a 50-point,
Sure. But like to the risk management point, if I'm trading with the EMAs, if they cross against me, the back testing says, and Tom can speak on this a little bit, and I think it's a good point. The back testing says that that's a really bad sign for the trade. Whether you're getting 50% of the trade off, 75%, 100%, I have risk mitigation signals. So at the same point, like you said, I'm going to have take profit ideas on the way up that are variable. I don't use set take profits anymore. Then you'll have risk mitigation on the back end of that to take away if it's not working for you. So that's how I'm using risk management as the survival tool. But Tom,
one last question on this risk mitigation. The risk mitigation, does that mean that in a current environment, maybe you will take, let's say in a bullish environment, a good trading environment, you take only 50% off at the first sign. Now you may take 60% off. Like in other words,
100%.
You take. Interesting. 100%. So that's dynamic too. So your defensive posture becomes greater.
And I think in a market like this, defensive posture wins because am I up 10% this year? No. People that are up 10% are taking on a lot more risk than me. My risk this year so far is relatively low, but my gain is still bigger than my risk. So to me, that's a good sign considering how many other people are getting chopped around and how many people are saying the market is slow. So I think that defensive posture is actually a profitable posture right now, at least the way that I read it,
Interesting. Okay.
Yeah.
What about you, Tom? What's your market survival tool? What do you sort of rely on these days in order to stay alive?
Without a shadow of a doubt, for me, it'd be my trading journal, the trader improvement program that I use every day in the Black Shirt Club and with the traders and with Austin. It's something that me and Austin have created, and it just tracks everything. And I think that being adaptable in this market has been a huge tool to stay in the game ultimately, because again, like I said, in January, I found the start of it, I just got it on the wrong side of a few things. If I wasn't tracking and journaling all of my trades and understanding why I was getting chopped around and, like you say, not seeing them continuations, I wouldn't have been able to adapt. And tracking everything that we do within the BSC and ASFX, that's allowed me to adapt very, very quickly. And
okay, let's take a look at this. So this is sort of like, could you maybe highlight 2 or 3 factors that you track that are very, very valuable to you? This is a Google spreadsheet, I guess you guys made,
So
right?
this is just literally just a spreadsheet. So first, every single day, we've got a daily report card. So this is today. I go through, I track my pre-trading routine. So do I put myself in the best mental state before I start the day? These are the things I have to check off to make sure that I'm ready. I fill out my news for the day, my watch list, and then I set my objective. So the stuff down the left-hand side starts the day. Then throughout the day, these are the trades that I've taken. Why did I take the trade? How did I manage the trade? How did I feel during the trade? And then why did I exit and what could I have done better? So that's the first thing. We do this every day. Track that, and then obviously we'll review this later. Once the trade's finished and played out, I keep a markup of all the trades that we take. So I'm able to see very, very quickly what is happening and why I'm doing what I'm doing.
So you journal, and then you also mark up the trading view chart.
Yes.
Every trade. Yep.
Every trade.
And then you save that markup and you kind of attach it. Is there a place to attach it?
If I was Tom's coach, what we do as the coaches, what Tom is doing with his guys and I do with my guys, we'll look at the whole week of their trades, pull up all those markups, line them up. We'll just start picking out patterns that they weren't paying attention to, because day to day you can't keep all that on mind and remember.
Right.
We'll start pointing out, look at this commonalities in your losses. Look at the commonalities in your wins. That's one easy exercise that we do almost every week with the guys. So, Boris, none of us are getting any younger, and our brains are not getting any smarter until we get that Neuralink. So it's hard to remember what you did on Monday and how you felt on Monday when it's Friday or Saturday, Sunday, when you want to do a review. Show them really quick the weekly report card, Tom. And this, any trader should be doing this. You can use ours as a sample, but anyone should be doing this. And these are great questions to ask yourself. So it's like, how well did you execute your plan? What did you do well? What did you not do well? What repeated mistakes did you have? What's your main focus for next week? What was your best trade? What was your worst trade? Just good questions to prompt the proper thoughts for review.
And what's the little checklist on the bottoms there? Because it's hard for us to see on the full screen.
Yeah.
But
so this is
habit tracker results.
Habit tracker.
I think I've seen. I've seen like these type of.
Yeah, it's not new. This is just our version of it.
Yeah, exactly that. We track trading errors. So what trading errors have you made? So when we sit down with the other people that we coach and ourselves, when we look at each other's, what's the mistakes that you have made the most? What are you doing? What are you repeating?
Are you missing trades?
We can get together and
are you getting out of trades too early? Are you oversizing? If you are honest with yourself, and our guys normally are, if they pay to be in this program, they're honest. So they're tracking like, oh, today I oversized. Yesterday I oversized. And then over a month, this page here shows us what were your biggest mistakes? What are you repeating the most? Okay, next month, let's just focus on not doing that. Just one at a time. And I'm sure, Boris, because you've spoken to a lot of traders, trading is like an onion. You'll pull back a mistake of okay, you're not trading enough. You're under trading. Cool. We'll get you trading now. You're getting out of your trades too early. Boom. We pulled back one layer, solved one problem, and another one popped up. Okay, now we're getting out of our trades properly. Now you're trading too small. Now we got to fix position sizing. So it's like an onion, with these guys. And I think that as you start to peel them back, the good thing about it is the awareness that you have on these repeated mistakes allows you to not make them as much. That's the big thing. The awareness is what stops you from repeating mistakes. And last point, trading is, and I think, tell me if I'm wrong, but in trading, mistakes never stop. They just cost you less and they happen less often. So that's what the awareness is trying to do, is make those two things come to life.
So would you guys say trading the NFPs off your iPhone without even looking at what the results are while you're dropping your daughter off at school is not good trading habits.
It's good for your stress levels. Like if you want to be stressed out and have like a clenched butthole and high shoulders all the time, yeah, go ahead and go for it.
I read something really interesting that I like. I totally 100% agree with it. I think it was Morgan Housel, who is, by the way, a great guy to read. He's not a trader, but he writes a lot of he writes probably the single best money book you can possibly buy. And his whole thing was, he basically said that nothing matters. He said strategy doesn't matter, habits doesn't matter, because ultimately all we are, he says, we don't care about money, we don't care about status, we don't care about life, love, everything. He says all we are at the end is just dopamine machines. And I thought that was really, really true, because that's literally what we fight every day. Is we just it doesn't we never want to admit it to ourselves because we think we're so far above it. We're not junkies, but we really are at the core of it. All of us are just dopamine machines, and that's actually realizing that really, really helps you sometimes control that, because you realize that you are just chasing that high.
Awareness. You get aware. If you are aware of the dopamine hits that you're searching for, maybe you cannot go for them. Have a little self-discipline,
Right.